Every business needs fuel. For decades, that meant banks. But times change, and so does the way capital flows. Hi, I'm Ishkaran Chhabra. Welcome all to Centricity Founders Speak. Think of private credit as a custom required to meet the business needs. Private credit is negotiated between two individual businessmen or institution. Unlike public credit, which is regulated, which is traded over the counter and the exchange, regulated by the institution, private credit is negotiated between two individuals and is customized to meet their requirements. This is where private credit, which is customized to meet the business needs, adds the fuel to the business to grow. Private credit has really evolved over the last few years in India, especially before COVID, with the rising NPAs and the bank lending slowing down to 6-7%, which was a multi-decade low. Private credit has taken off in a big way in last 6 to 7 years. From a context point of view, private credit in 2010, which was just at $0.7 billion, has increased to $18 billion over last 16-17 years, which is a 26x growth. As the estimates say, today, 2025, the private credit is a $25-30 billion industry, and it is expected to grow to $50 billion by 2027, which is a phenomenal growth by any means and standard. Family offices, sovereign wealth funds, pension funds, and large asset management companies have started directly fueling this growth in India. This growth has been fueled by money for mergers and acquisition, for working capital, for refinancing, and for special situations like promoter wanting to increase stake, buybacks, or one-time settlement, which is leading to this phenomenal growth in this domain. Last year's deal flow reflected a diverse and mature ecosystem, whereby 25% of the deal flow was towards growth capital, 35% towards merger and acquisition, and a whooping 39% towards working capital and refinancing needs. Private credit is shaping industries from real estate and infrastructure to mid-market corporates and emerging sectors. Private credit gives access to investors through structured and hybrid lending, once open to few and limited players only. Private credit is not an alternative anymore. It is the engine driving India's next chapter of growth. Because progress begins when capital finds purpose and conviction meets opportunity, clarity, conviction, and centricity.